Hi, good morning. This is Hyperwave. I am Leah Wald here with Tyler Jenks. And Tyler won't even tell me what this one's about. So we are going to be in for a treat together. Hold on. Oh, I do have this on mute this morning. But Tyler and I have decided we are keeping this to 15, 20 minutes. So when he gets over, I have to be the obnoxious person that cuts him off. You guys hopefully don't get angry at me on this one. But what I do know is that he is going to give us his thoughts. And we're going to go straight to the charts. We're going to see what's up and we're going to hear it straight from the man. So we're in for one. So Ty, what are you thinking? Because I'm with everybody else on this one.
Great. Thank you very much, Leah. And thank you, everybody, for tuning in early. We've been getting an awful lot of responses, questions about exactly what's going on with Bitcoin from my perspective. And so I'm going to go through charts very, very quickly, not to teach you about the charts or the Bitcoin price, but to let you see the process by which I attempt to put a number of different technical indicators together with money management to draw conclusions, to identify targets, and all of the rest of it. Before I do that, and it'll go very, very quickly, we probably won't have time in this session for questions, but what I want you to do is to sort of get into my head on why and how I draw conclusions about an asset class at a particular point in time. We have spent a lot of time trying to show you how the tools are used one by one, and a number of them are proprietary tools that you don't hear from other technical analysts, because we're just introducing those now to our Hyperwave channel. This is purely educational. You have not heard me once in the last 4 months make a recommendation. I think you should buy this or sell this. I'm trying to let you see how tools can be used to draw conclusions, and then everybody must draw their own conclusions and use those tools. So with that, I'm going to go right to screen share, and this is a little bit like we are going to be doing this very quickly. So here we go. We're going to start with the simple chart of Bitcoin with nothing on it other than volume at the bottom and two phase lines, the phase 2 line at the bottom and the old phase 3 line, which is now the trend line. And I am going to superimpose a number of indicators. I would look at this chart and I would immediately say, this is a hyperwave. This hyperwave is in phase 7. This hyperwave attempted to hold the phase 3 line, becoming a funky hyperwave. It did not do that. There is no longer a phase 3 line, but that line is still there as a trend line. And now the question is, because we are in a phase 7 coming down, are we going to go all the way back below 1,000? Or are we going to be able to try to hold the phase 2 line like we did the phase 3 line for a period of time, and it will either hold or it will not hold, in which case it will be a perfect hyperwave when it gets back down below $1,000. If it does hold at the phase 2 line, it can go back up to new highs and by establishing a new phase 3 line and then a phase 4 line after that, and then a 5, 6, and 7 again. Okay, so that's what this chart tells me. So now I'm going to take off those hyperwaves, and we're not going to talk about hyperwave anymore. We are going to take the same chart and we are going to start by superimposing a number of things, the first of which will simply be moving averages. And I'm only going to use 2 because those are the important 2. And these tell me that the short-term moving average, in this case, it's a 7 and a 30 week moving average, has broken below the long-term moving average, but the long-term moving average is still moving up. That's all that tells me. It says that we are in a long-term uptrend according to that moving average, but we are in a dangerous zone, and that the price has come back up to the long-term moving average 3 consecutive weeks without being able to get back over it. And now, as of today, we have a big candle to the downside that never touched that long-term moving average and is threatening to break the short-term moving average, which will then turn the short-term moving average from a slight upswing back to the downside, which will eventually pull down the long-term moving average. That's what that shows me. Now I'm going to show you the same thing at various time levels. This is a 3-day chart, 3-day candles, and we're just looking at the moving averages. We had a death cross here. We attempted to get back to the long-term moving average. It failed, which then turned the long-term moving average, in this case, it's 33-day periods, down. So through this period of time, we had all 3 elements, the price, the short term, and the long term, moving down on a 3-day basis. Then the short term began to turn and prices went up, and prices got above both the short term and the long term and went sideways for a while. And now the price is broken below the short term, and as of this candle, this 3-day period, we have broken below the long term. Unless we rally price very quickly on the 3-day basis, the short term will cut back down through the long term, and the long term will resume, signaling a full bear market. On the 1-day, this is 1 day with 30 and 7 periods, so 30 days and 7 days. We have had a number of crosses because it's a shorter term. We had a golden cross, another death cross, another golden cross, and it now appears like another death cross. The important thing is that this last candle, the one we've been talking about with all the tweets today, has broken back below the longer term moving average, which will pull the short term into a death cross unless prices reverse very quickly. On a 12-hour chart, we've already got the cross back into a fully bearish position with prices below the short-term moving average, which is going down, and the long-term moving average now has turned down as of the last 2 candles, and that is a fully bearish market for Bitcoin on a 12-hour basis. Okay, I'm going to take those off, and I'm going to move to stop and reverse points, and I'm going back to the weekly. The weekly has never turned positive all the way through all of this up and down action over the last 2 months. We were getting close, but now you see what's happening is that we are falling away from the stop, which is currently at 10,885. So this is in a fully bearish position and has been for 3 months. On the 3-day, we broke the downtrend about 10 candles ago. It has become an uptrend for this period of time. We're talking about a 3-day candle period, but look at what is happening as of this morning. We are about to break down below that on a 3-day basis. It is still bullish, but I've got that dotted approximately 83.38. Let's go to the 1-day. The 1-day again is chopping through the stop and reverse points fairly frequently. We had a pretty long period of time where it was signaling the downtrend, and everybody remembers this big up candle that took us all the way back to 10,000. The stop and reverse worked very nicely, keeping you in that, then went negative, then went positive, and just on this last candle has gone negative again. That's the 1-day period. On the 12-hour, it is negative, but you see all of the back and forths and why stop and reverse points are used for major trends, not for flattening markets. Picked up very nicely this entire big move up, and ever since has been signaling confusion on the 12-hour period. We are now sharply dropping below those. It will take a while to get back to those stop and reverse points. I will now take those off, and we will move to the MACDs. The MACDs on a weekly basis turn negative a long time ago when we tested the phase 3 line and have been negative ever since. It is true that the histogram has been getting less bearish for the last 5 weeks until this candle. We are now flattening out, which means that that is going to cause the shorter term of the 2 averages used here to cause the histogram to begin another decline. That has not yet occurred, but it is still fully bearish on a weekly basis. On the 3-day, it went through a long period of bearishness correctly. We then got the big upswing that took us back to 10,000. We couldn't get through 10,000, and that's one of the reasons I came out earlier with my short-term decision to get out of the market and get back into cash, even though the MACD had turned positive. Notice that the histogram is getting smaller and smaller, and it will not take much for it to turn to the negative side if we stay anywhere down in this territory. On the daily has turned negative 4 days ago, and it's beginning, the histogram is beginning to enlarge into the downside, and that's going to be hard to turn around with this present activity over the last number of days. The 12-hour has been negative for some time, even before we got up to that 99 high. During that period, it went slightly positive for a short period of time, and now is accelerating to the downside, and the histogram is getting larger and larger to the downside. I will now take that one off. and we will take a look at the RSI on a weekly basis. On a weekly basis, the RSI, I said, made me nervous on this move up because the RSI had never gotten on a weekly basis oversold the way it had been overbought to the extreme on all of these occasions through the upward part of the hyperwave through 2, 3, and 4. Even on the bounce back from 11,000 to 17,000, we stayed very strong on the RSI. When it finally began to break down towards the 50, the middle line, all of this activity took place, but it never got oversold. And now you will see that the RSI, after trying to get back up over 50, has turned back below it simply with this last candle. That's on a weekly basis. On the 3-day, it got back to 50 and now it's turned back down. On the 1-day, it got all the way back up to almost overbought at 70 on this move, but price couldn't notice that the RSI was dropping during this period of time where the price came up back to actually got above these highs, but couldn't get above the 10,000 level, which had been my short-term target. And then you can see the RSI dropping very quickly below 50. Will very probably get back down to an oversold position. Same thing with the 12-hour. Exactly. We became overbought back here. We went to a lower high, so we had a non-confirmation of this high, which was another reason that I thought that 10,000 was the terminal point of this entire move. And now we have dropped all the way back down below 50 and are coming very close to being oversold already. Okay, I'm going to drop the RSI and we are going to simply take a look at the short-term chart without any technicals. This 10,000 level, 94.50 on a 1-hour basis, which was on a 2-hour basis, 99.49 as the top. We patiently looked for a target between 8,500 and 87.50, which last night we hit by getting to this candle where we closed at 86.07 and this candle where the low was 86.77. And at that point, my target of 8,500 to 87.50 had been met, and I immediately tweeted that out this morning. Now, I said that I have gone neutral on my short term. Clearly, I am not neutral on my long term or my intermediate term for all the technical reasons I just laid out. But on a short-term basis, I had targets of 8,500 to 87.50, and I thought we would at least reach the 87.50 level last night, and I tweeted that out yesterday afternoon. Yes.
We are at 20, but because it is a soccer match, you get the additional 4 minutes of overtime.
Thank you. I asked Leah to hold up the time card for me, and I think we've been able to cover what we needed to on a technical basis. But I'm not talking about Bitcoin here. I want you to see the progressive nature of the analytics that go in to determining short, intermediate, and long-term moves. And you can do that for everything: the stock market, the gold market, individual stocks, individual ETFs, in the exact same way. Now, I will make one last comment, which is I could change my short term from neutral to either negative or positive, depending on what happens here over the next several hours. Right now, we almost precisely hit the lower end at 8,500 of my target after going through the higher end at 8,750. But it's resisting going below that. And if you'll remember the shorter term RSIs, we are now deeply oversold on a 2-hour basis. So that tells me that we could get a bounce, and that bounce would go to an area of resistance, which I would put somewhere at the 9,000 level because of this action and this action. I have not made that call yet because I want incremental evidence to continue to build in one direction or the other. And with that, I will turn it back over to the referee, and we will get off of screen share. And thank you very much. There's a possibility we will do another vlog later in the day, depending on our schedules and what happens in the market. Thank you very much.
Tyler, you nailed it. All right, everybody. Thank you so much. Definitely, we potentially will come back later with another show. I hope that you guys have a wonderful Friday. Thank you so much.
Bye-bye. Thank you.